Welcome to the episode of Friday the 13th. Let me actually start with a little humor. Last week, I swapped a lot of caffeine technology stocks with Motilal Oswal. Today, Motilal Oswal has come up with an article. They say that the target price for caffeine technologies is 1400. Their own stock, which I bought, is not moving. Now, what do I do? The second comedy of the day, Nifty. It was a weekly Sensex expiry and that will change from next year from 1st of January to Tuesday. The data says that the trading range was 2.45%. It actually was a lot more. If you see, 2.5 is this distance. But Nifty came down 60% of it here. And then it was volatile in this zone. If you add these spikes, this is nearly 5% movement for the index. How's that for volatility on a Friday? And if these spikes sounded very small to you, these are 100-point spikes. So basically between 1225 to 1255, this small spike was 200-point movement in Nifty. Based upon popular demand, today's Nugget will be second episode of consumption stocks. Today I'll not just focus on the beaten down stocks, but in general talk about 5 more consumption stocks which I think are in the buy zone. Now volatility is not new to us, but the problem comes when the fall is totally uninvited and you fall in this trap and you sell. And then the entire distance is covered back. In fact, Nifty went up a lot after this point also. And today's fall was mostly about metal, Tata Steel, Hindalco, JSW. IndusInd got a downgrade today. The final calamity for the day was Shriram Finance. Airtel was rocking today and Reliance is back at the top, followed by ITC, ICICI Bank and HUL. IT continues to make new highs. Now Next 50 was not as optimistic as Nifty 50 and that would have reflected in retail portfolios today. The Adani pack was a bit distributed today. Green and Total were in the bottom. Then Adani Power and Adani Energy that was at the top, along with IOC, Shree Cement, Dabur and Zomato. This graph suggests there were hardly any bears around, but that is primarily because large stocks were up and they were carrying their respective sectors up. 22 sectors are showing up. The best is telecom because Airtel that was up nearly 4%, followed by banking, software, oil and gas. Heavyweights giving company to bulls today. Investment banking, though it was down a bit today, that continues to be at the top and it will be hard to remove it from the top for some days because of this particular pattern of large greens. At the end of the day, Nifty looks beautiful today and people who are short on Sensex today, they would have really bled a lot of money. Next 50 hit a new high very early in the day and Nifty IT that hit a high somewhere around 2 o'clock. Most stocks had this tick pattern today. That is the positive injection that came in roughly around 10:45. Stocks as well as indices, everything went up something like this. Airtel of course was up whole day. Bank Nifty also looked lot better today. That's because the top tier that was up and the patterns for most stocks here also was the tick, fell in the morning and then recovered and kept recovering till the end of the day. And if you wonder why IndusInd is suffering alone in this pack, then in this particular segment, IndusInd is the only bank which has a microfinance arm. HDFC Bank also has HDB, but that is unlisted. In case of IndusInd, that subsidiary got merged with IndusInd. Also, HDB's percentage contribution to HDFC Bank is minuscule. IndusInd subsidiary is around 12% in size. And one more bank which has a similar situation, which is red, is RBL Bank. RBL Finserv is a part of RBL Bank, the listed entity. IT ended the day in a beautiful manner. The index was up 1% literally, but the day did not start that well. Most stocks picked up roughly around 10:30, 10:45. That's the tick pattern. Infosys, HCL and LTI Mindtree hit fresh highs. Auto besides Hyundai, everything was looking good today. Auto ancillary, specifically the tire companies were doing well and I talked about it yesterday. I bought a little Apollo And do you know the reason why I'm a little optimistic about Apollo? Because Apollo is a big player in EV tires. I was not even aware that the EV tires are a little different. Now, of course, everyone has started making EV tires, but Apollo started early. The other tire company, which is a bit different, Balakrishna, because they are into replacement tires, that too for large tires, the commercial ones, tractors, trucks, etc. And they are not a small company at all, 55,000 crores, just a little short of MRF. HAL with the big order behind them, which came in yesterday, 13,000 crores. They started very well at the top point of the day, but then immediately came down. And Zen Technologies made a new high yet again, 2.5% up. Metals was a sorry pack today. These are very large companies and they react very sharply to any news from China. We have to somehow get rid of this dependency on the China factor. IOC got an upgrade today from Jeffries, that was up 2%. This particular pack is heaviest in my portfolio right now, along with microfinance. MRPL, IOCL are the largest quantity. Sugar pack, ETH Perry hit another high. And though it is the largest company, the P is still not the highest among other sugar companies. Consumption was looking very good today. Most stocks were up, and that too big gains: ITC, Nestle, Dabur, Britannia. The sore part was that the volumes were not very high. Non edible was mixed bag today. HUL, Titan, and Asian were up. Page Industries hit another high. Silver had a bad bump yesterday, nearly 5% in the international markets. That reflected in the ETF prices today. The indices, all of them look beautiful. Only next 50 that was down a bit. But people who are seeing their portfolios around this particular position, they might have shut their computers or cell phones and gone away. We will check the portfolio on Monday now. And one major factor for that was FIIs bought. FIs are not giving any patterns to retail. You can't decide tomorrow based upon today. And DIIs, of course, had to sell because FIIs were buying. The figure for both of them, the net one for the month, roughly at the middle point, is both greens. And while retail looks forward to buying from these two players, right now retail is not very happy. Some good news or rather challenge for Coal India. The government has set coal production target 10% higher for next financial year. Now Coal India also has got 10% higher number for them. About 85-90% of this goal is meant for Coal India. Rest is imported, mostly by Adani Enterprises using Adani ports. Nifty was all green, and yesterday most of the US markets they were red. My trades for the day, nothing sold. But today I bought Indian Hotel. I already have it in my portfolio, the long term. I thought it's going up every day and I need to study the new business model, but I like what I see. So I bought a little more of it. I bought Angel Broking. That was at the bottom of the day when it was down. Silver was down 5%, so I bought Nippon Silver. And very early in the day, I bought a little HL, one unit only. I was just trying to see if I can make a little money out of the news that came in for the orders. Let's see if it goes up on Monday now. Consumption Stocks episode 2. Before I start, I just wanted to show something in Asian Paints. This is the graph of Asian Paints, and if you see there's a red line here, that is Nifty. This graph starts roughly around 2007. Asian Paints has given returns of 3626% and Nifty 319%. And Asian Paints has got stuck in this zone, but if you see one thing which I wanted to show, these ups and downs, though they have become very frequent in the last decade or 5-6 years, Asian Paints has always recovered from them. And this time the fall is slightly higher because there is a big industrial house which is posing as a new competitor. So based upon these patterns, I don't know where it will stop, but a bounce back is very highly likely. Let me now take you through some of the stocks that were asked for. Let me start with the big boy HUL. Now HUL's model is slightly different from the other consumption stories. For example, the fight going on between, say, Zepto, Amazon, because all of them would sell HUL. All of them would also sell PNG. The consumer has a choice whom they want to buy from. I don't think consumption is going down on that front. They are more in the essential category. They are not discretionary. You will not use less surf, for example, in your households. Also, what happens is there are phases or quarters when marketing and sales they go overboard. For example, they might have sold a lot during, say, monsoon sale, large packings on Amazon under discount. People accumulate those inventories. For example, if you bought a lot of pear soap in a large pack because there was a deal, you'll not need a refill for maybe 3 months, 6 months time. This happened during pandemic also, when a lot of people did lot of online shopping and a lot of consumption stuff got accumulated at home. After that, there would be a dead quarter. I would not expect this to go down further. There is a minimum threshold demand that will always be there, irrespective whether there is a recession or not. Most people will not downgrade their lifestyle and start using a cheaper surf or a cheaper soap or a cheaper shampoo. We might not see HUL go up in a rush maybe, and it may consolidate for next 1 quarter or 2 quarter, then gradually go up. See here also, from May till about October, this entire distance was covered in about 3 months time. So I won't be surprised if we see a new high from HUL somewhere in Q1 of next year, and that will nearly be a 25% gain for anyone who buys now. Not a bad deal even if you get it in an year's time. I continue to hold HUL. I don't think I will sell it. I am not buying it to average lower either. I'll probably wait for it to start recovering. For me, this is the point where I'll probably consider laddering. This is around 2600. Next story, Titan. I don't see any problem with Titan's business model. I see stories that Kalyan Jewelers is eating into their pie. 77,000 crores, 3.1 lakh crores, 4.5x size. And Titan is present pan India. They are present internationally also. It's a big market. Kalyan Jewelers can grow, but I don't think they will eat up the Titan pie. The gold prices issue is over. That happened somewhere around here. This quarter, you might still see 100 basis points kind of pressure from the old inventory, maybe. But I would expect that to be passed through indirectly to consumers in some ways. And in fact, Titan, knowing them, would have bought a lot of gold when the prices were crashing. The stock is already recovering. It is out of the red zone, not very far off from highs. See here, 11% only. I expect this quarter to be best for Titan, Diwali as well as marriage season. The result should be fantastic. Trent has a beautiful graph. While everyone fell into the red, Trent did not fall much and it has started coming back already. This is despite this huge run up. It was literally above RSI most of the time. It fell below, now it is moving towards RSI level again. In fact, if there is a problem in the economy, if consumption is under threat, then people should actually buy more from Trent. This is for the masses. Currently, the stock is 60% away from 52-week low and 19% away from 52-week highs. The P is high, but that is forward P, and for Trent, it will not be low unless they really have two bad quarters. Next stock is ITC. It goes into sulk zones for quarters and years, does not do anything. Right now, there are two factors for ITC. This was general consumption falling, and this particular fall was because there is talk that GST will be increased on cigarettes. I've already talked about it a couple of times. I don't see any impact to IT sales or margins. This quarter, the sale may actually be higher, and I've talked about it in previous episodes. I see this stock going up significantly from here. In fact, after the demerger of some of the businesses as separate units, the core ITC business, which is the cigarette business, that should do lot better. And ITC right now is not very far off from 52-week high, 12% only, not in red zone. One good thing about ITC usually is that the dividend is reasonable. Next stock, Eicher Motors in auto. Now this stock is in green zone right now. It's 6% from its 52-week high. In fact, it is right now steady somewhere around 47.50 in a range. It has not fallen at all in the current fall. The reason I am talking about this particular stock is there is a new theme I am working on, and I'll show you after this slide. One of their core products, Bullet, is aspirational. There will be new people becoming 18 plus every year. and they will all aspire to buy this bike at least once in lifetime if they drive a two-wheeler. I don't see any competitor to Eicher Motors. Many players have tried, no one has succeeded. They also have pricing power, and this particular business is nearly recession proof. I don't have Eicher Motors right now in my portfolio. I do intend to buy it. Now, let me show you a glimpse of one new study I am doing right now. These stocks I called rich stocks, and there's a video that I'll probably release once I complete the study. Most of these stocks are not there in my portfolio, and when I rejig my portfolio next time, you will probably see most of these stocks in my long term portfolio, some of them at least. The video's title perhaps will be Rich Stocks or something like that. Hope this analysis was useful. Let me know if there are still more stocks that I have missed or you want me to cover. I can release episode 3 next week. Thanks for watching. Have a fantastic weekend.